So many buyers in Metro Vancouver's real estate market have been getting absolutely crushed. Not because they're making reckless decisions, but because they're being fed myths that aren't true, they're not being told critical information, or worst of all, they're being completely misled. And the result? Upwards of tens of thousands of dollars in unexpected costs that come out of nowhere. In a market that's supposed to favor buyers, the informed come out on top, and the ones who aren't equipped get blindsided and end up paying the price. These are the kinds of traps that you don't hear people talk about and costs that real estate websites don't really mention. So today we're pulling back the curtain on the 4 biggest financial traps destroying home buyers in Vancouver right now, including one that's wrecking buyers harder than anything else, all because of massive misinformation. But also stay tuned for our step-by-step plan to avoid getting hit by any of this. To get right into it, let's start with strata property issues. If you're purchasing a home in Metro Vancouver, unless it's a detached home and you got your own lot, chances are you will be dealing with a strata. Now, most buyers fall in love with the kitchen, the view, the staging, the amenities, so on and so forth, but almost nobody spends the same energy on the strata documents, and that's where the real danger lives. Here's the reality. You can move into a place thinking everything is perfect, and then out of nowhere you get a notice from the strata saying, we're issuing a special levy of $28,000 per unit for structural envelope repair, or your share of the building's parquet membrane repair will be $45,000, payment options, lump sum, or 4 installments. And you legally have to pay it even if you just moved in 3 months ago. For example, in Vancouver, there was a complex that was hit with a special levy of $16 million for building envelope failure issues, which translated to tens of thousands of dollars per owner. It isn't unheard of for owners to pay special levies of $50 to $100K for full rain screen or building envelope remediation. Too many buyers either aren't aware, don't understand, or simply make semi-assumptions that the depreciation report looks fine, there's money in the contingency reserve fund, or that the building seems like it's in good shape. But what many don't realize is depreciation reports can be outdated, strata minutes can sometimes dance around serious problems, and a healthy looking contingency reserve fund might be tiny compared to what's actually required. And this is exactly where smart buyers win. If you really want to protect yourself, you need to go deeper than just scanning a few PDFs. On top of solely relying on yourself or even your representative, make sure that your representative is providing full reports as part of their service. Just the agent themselves looking into it isn't enough. Make sure they're utilizing third parties or designated trained AI tools to read between the lines and unlock any hidden problems. Look at the minutes holistically for the past few years, not just for the past 2 months, and compare the financials with the upcoming costs. Now, all this isn't to say that stratas are bad or to not buy in a strata or you're gonna face special levies left and right. There are many, in fact, the majority of stratas are proactive and do a great job. But this is more so for you to have awareness so that you can go into the process with more knowledge and more confidence. So before you fall in love with just a home, fall in love with doing the right things and examining paperwork, because what destroys buyers is rarely the home they buy, it's the financial landmines buried beneath it that usually gets them. And now, speaking of landmines, let's talk about one of the biggest myths that buyers believe right now, especially in today's pre-sale heavy Vancouver market, and it's costing people a fortune. That's right, the second blind side is the pre-sale pricing myth. This is a big one, and it's something that buyers often hear, especially on social media and from friends or family giving advice. We've seen too many tragic stories panning out these past 2 years, and the truth has to be shed on this matter. Many people believe that buying a pre-sale means getting in early at a lower price, almost like buying wholesale before everyone else does. But here's the truth that nobody seems to say out loud. Pre-sale does not mean discount. Pre-sale actually usually means premium. And if you don't understand that, you will get burned. Pre-sale homes almost always cost more than comparable resale homes today because you're paying for the shiny and perfect looking home. It's brand new, nobody's cooked in the kitchen, nobody's lived in the bedroom. You get modern amenities, finishings, designs. You get the 2-5-10 home warranty for peace of mind. And sometimes it's even just about getting bragging rights. People love new. Now, don't get me wrong, all those are true and some amazing features, especially when you couple it with the government programs that help you save a lot on taxes. But having said all that, buying new is a premium, and guess what? Developers absolutely know that, and oftentimes prices will reflect that premium. That is why most pre-sales and new construction homes are priced above what the current resale market supports today. That's exactly where people get blindsided. To give a better idea of the marketplace, 80% of developers and developments that have completions further out will be priced based on where they expect the market to be 2, 3, 4 years from now. They price into the future, and that means in many cases you're paying more than what the home is worth the day you sign. However, the other 20% of developers who price competitively and where the buyers were prepared the moment that great opportunities were rolled out are the ones that end up winning. They 100% exist, data will show it. And this is where if you do it right, you'll be laughing years down the road. But if you do it wrong, you'll overpay without even realizing it and feel the pain years into the future. The bottom line is this: if there is no potential for an upside, then why would you buy a pre-sale? Now, if you're someone that's looking to make a move, whether it's upsizing, downsizing, purchasing your first home, or anything in between, we would love to help with the entire process. We get people calling us all the time to help them with their move, with their decisions, and to just be a resource and service in doing all the heavy lifting. We track the market, pre-sales, new construction, look at their pricing, their incentives, their overall value, so that we're able to give our clients the right information and opportunities. It doesn't matter if you're looking to move in 6 days or want to get on the VIP list in preparation for 6 months down the road, go ahead and reach out to us and we would love to help. Our contact information is right there on the screen and in the description below. Shoot us a message or best yet, book a Zoom call and we'll make sure you get access to the 20%. So yes, the win in pre-sales isn't the fact that you're buying it pre-sale. It's because you're buying the right opportunities that have great upside. Access to the correct information is everything, and without it, buyers can end up paying far more than they expected. And that actually ties perfectly into the next blind side that buyers are running into right now, one that often hits after they think everything is safe and done, which is also related to the last point that we'll be talking about next, and that one is by far the worst one and happening to the most buyers right now, so make sure you don't miss it. But the misunderstanding that hits after buyers think all is safe is around mortgage approvals. You see, a lot of buyers believe that once they're pre-approved, their financing is guaranteed. But that's not how lending works, and this is where people can get caught off guard. Pre-approval simply means that the lender has reviewed your personal financial situation, your income, your credit, your debt, and so on, but the actual mortgage approval depends on multiple other factors, including the lender's appraisal of the property that you're buying. Lenders don't lend based on what you agreed to pay. They lend based on what the bank's appraiser determines that the property is worth. So if a buyer agrees to purchase a home for, say, $850,000, but the independent appraisal values it at $800,000, the lender may base the mortgage amount on that lower number, and in that situation, the buyer would need to cover the difference themselves out of pocket to complete on the purchase. In a changing market, especially one with price fluctuations, appraisals coming in lower than the purchase price is not that uncommon. And if that happens after subjects are removed or when a pre-sale contract has already been signed, buyers may have limited options and tight timelines. For some buyers, that shortfall can be tens of thousands of dollars more than what they were expecting, and that can put major financial pressure on people who thought everything was already finalized. This is how deals can fall apart, and in some cases, depending on the contract and legal conditions, buyer may risk losing their deposit or face legal consequences if they can't complete. Every situation is unique, but what's important is that buyers understand the risk before they remove subjects, not after, or before they lock in on a pre-sale contract that is completing further away in the future. With all that said, here's how you can avoid being blindsided by this. The first one may seem like an obvious one, but don't remove subjects unless your lender or mortgage broker has reviewed the specific property and giving you the green light. Number 2, know the comparable sales so you understand where the offer lies compared to the rest of the market. And lastly, always have a financial buffer. Know for a fact that you will be able to complete even if by some unfortunate reason things go south. This is especially true when purchasing something that doesn't complete for a while. Rates can change, markets can change, so you need to understand the risks and whether you'll be okay regardless before walking into it. Now, the last blind side, and one that has hurt way too many people, is in regards to the GST rebate. An overwhelming number of buyers have been misinformed when it comes to the GST rebate. So many were expecting that money back when in fact, it's not even a guarantee yet. And this one misstep is costing people left and right. Now, many of you have probably heard about or been informed of the GST rebate on new homes that was introduced in May this year. What's being tossed around an unimaginable amount right now are people preaching, oh, if you buy this new home, you'll automatically get the GST money back. So for those that don't know what I'm talking about, here's a quick summary. First off, GST is applicable on new homes, not on used homes that have already been lived in. The federal program called the GST New Housing Rebate allows eligible first-time buyers or of substantially renovated homes to recover the GST paid on the actual property. And if the value of the home is under $1 million, you recover the amount paid in full, and you get a partial rebate from $1 million to $1.5 million. This might come at a shock for many of you, but it is still just proposed, and it's not fully enforced yet. Too many buyers have assumed that the rebate is a lock and they budget accordingly, when in fact the full rules, eligibility, and timing are still in process. The bill is still currently in Parliament where the second reading has been passed, but the bill hasn't yet received royal assent, so as of the time of making this video, it's not officially a law yet. The last point to keep in mind regarding this is that this is a rebate. It's different from the property transfer tax exemptions that more people are familiar with. It is a rebate, so you have to first pay for it, and then if or once the bill officially goes through, you can apply for the rebate to recover the GST paid. Even if things are looking positive and moving towards this becoming a law, you need to understand the stage of where things are at and the risks that are involved so that you will be able to make the best informed decision that doesn't come around and bite you at the closing table. Too many people have been faced with absolute shock once learning that they have to muster up $40K in tax that they didn't account for. So those are the 4 biggest blind sides that home buyers face here in the Metro Vancouver area, but now you're protected from each one of those. And look, we've been able to help so many individuals and families who are making a move here, from first-time buyers, upsizers, downsizers, relocators, and we've always been able to help them keep an eye out for these type of issues so that they don't get caught off guard. So if you're thinking of making a move within Metro Vancouver or to Metro Vancouver, we would love to help you make a smooth move. You can simply email us or just shoot us a text on the number here on the screen, and I'll personally answer. And now that you know the blind sides to avoid, your next thought might be wanting to view some homes that have had major promotions roll out. So if you're interested in that, you can click here and view the homes that have had some of the best incentives. And as always, thank you guys so much for sticking around, and we will see you in the next one. Peace.